We've been hearing a lot about bond vigilantes, the resurgence of the bond vigilante. Who are those people and what do they do?
Yeah, so you know what a vigilante is. Like if
Sure.
there's no justice in the system, then somebody comes along and sort of kicks butt, right?
Yeah.
And so the bond vigilante looks at pricing in the market and says, that ain't right, right? And they come in and reset prices. They trade against what is an unreasonable price structure. And they bring some discipline to the market where discipline's lacking. So if a central bank is going to misprice an asset or going to misprice bonds by setting interest rates at too low a level, bond vigilante comes in and says, that ain't right, trades against that number, and all of a sudden you see a major market move, and it makes the central bank look silly. And so the bond vigilante is sort of the great equalizer. And you could say they took a long vacation because there was a good 2-3 years where interest rates didn't exist. I mean,
Yeah.
you almost got a little nostalgic. Like, what is an interest rate exactly? Because they went to zero or negative or what have you. And it's almost like the bond vigilante took a long vacation. Well, now they're back. And when something's not right, we saw this in the UK last week. All of a sudden, something's not right in the market. Bank of England's going to do a little bit of this, a little bit of that, and all of a sudden, bond vigilantes step in and say, that ain't right. We're going to price it to the appropriate point, and it's okay if that's painful for you. It reflects reality. So that's usually what a bond vigilante does, is they bring discipline and they reprice a market in a way that's uncomfortable for a central bank, but it's only because the central bank is wrong if you assume the market is right. The bond vigilante is this group of bond investors that says, we've got it right, you've got it wrong.
Mm-hmm.